Hey folks, welcome to the Rate Update with Dan Frio. I, of course, am Dan Frio. Today is May 4th, 2021. Don't go away. We're going to cover rates and why do people use me, the Frio team, when they're getting their mortgage. So don't go away. We'll be right back. Hey folks, I just want to say thank you. Thank you for making this show a success. And without you guys subscribing and watching on a meticulous basis every day, we wouldn't have the success that we have. But I do have to come out with one frank statement. I have a lot of people calling me, and they're going with another company, but they need my expertise on what rates are doing, what program should they fit into. They have a contract that just got countered or accepted. What do they do next? And I was like, why didn't you choose me? And the average, it's under $1,000 that I was off in fees. That's why they didn't go with me. However, the frustrating part is now they can't get a hold of their loan officer. It's Friday night. They put an offer in. It got countered. They need a new updated pre-approval. Can't get the loan officer. It's Saturday. Same thing happens. Can't get the loan officer. They're approved and they need to raise their loan amount up $10,000. So they need to call their loan officer to make sure they qualify. Can't get an answer. So they're reaching out to me. It's frustrating. I don't mind helping, but what I would like you to do is please use my services for that, unless I'm way out there. But you can't, get expert service and many times get that fee or that rate out there that these companies are just throwing out there. They're putting their newbie people on there that really don't know much. They're just order takers. They plug in your information, hit the button, and they're done. What we do here is completely different. I monitor rates on a daily basis, as you can see. Basically, if there's a mortgage program out there that exists, I have it, and I'm going to show you some of the guidelines and some of the programs that I have. And we're accessible. My team, it's a team. We help you get started out of the gate. We help put you in the right program. We structure the loan to meet your needs. But the one thing is we're accessible. You're going to have a loan officer, a processor, and what we call a loan officer assistant that's going to be at your beck and call. So if you need somebody on a Sunday afternoon, you're going to be able to find somebody. You're going to be able to get somebody on the line. If not, I'll post my public information, my cell phone, so you can have that. So what I will promise you is if you work with us, you will even have my information and my assistant's information. You can get a hold of us on a Sunday afternoon, Saturday night, Friday night. So that's what I would ask of you guys. So I love the training part. I love teaching you guys, putting you in the right program, and giving you or presenting you programs that you might not even known about. But what I ask you in return is, I think I might be worth, if somebody is beating me by $750, you decide, is the $750 extra worth a peace of mind knowing that you're going to be in the right program, locked in at the right time, and have an assistant there, a loan officer or mortgage professional at your fingertips anytime you need them. So I'll leave it at that. So right now I want to go over mortgage rates and what they're doing for today. But first of all, I want to explain to you, because I have a lot of comments saying, Dan, how come when this number goes up, rates go down? So basically, Bonds 101 is this. Let me explain it to you how bond works. So you invest X amount of dollars and it'll be worth X at the end. So let's say, for example, you invest $50 today on a bond that's due or callable, if that's a word, that you'll return next year and get $100 back. Okay, so it's a $100 bond that you're going to pay $50 today to get. Okay, bear with me. I'll show you where I'm going with this. So you're paying $50, and next year you turn in that bond and you get $100 in return. Okay, what is your rate or your rate of return on that? You paid $50, now it's worth $100. It's 100%. You have 100% return. Okay, so now if you pay a higher amount, okay, so the price goes up. If you pay a higher amount, so say you pay $100 for that bond, and next year you trade in that piece of paper and it matures and you get $100 back because it's a $100 maturity bond. What is your rate of return? 0. You didn't get anything back because you invested $100 and you got $100 back. So again, see how when I paid $50, a lower price, my rate of return was 100%. When I pay at a higher price, the yield goes down to 0. So hopefully that makes sense to you. If not, write it on some piece of paper. I think it'll make sense for you. So that's what people follow me on a daily basis, because I follow this religiously all day, every day. So here's what's going on right now. For the past week or two, we've had a nice uptick in the business, okay? Or in the mortgage-backed security price. That means rates are coming down. So what I do is I analyze this stuff to try to figure out what the news is coming out and what trends are doing, basically, so I can kind of somewhat predict what should happen with mortgage rates in the next week or two. So when I do that, I chart it. When I'm charting and people analyze charts, there's a whole bunch of lines throughout here. Let me explain these for you real quick, but we won't go in too depth. These lines that go across are what's called Fibonacci levels. Those create a ceiling and a floor on where mortgage-backed securities will be trading, the price, okay? So they should bounce around in this area. They should, and they've been holding a nice pattern in there for the past, say, 2 months. Okay, but other levels that we also see are moving averages. We have a 25, 50, 100, and 200-day moving average, and those are represented in all these other lines right here. Okay, they're different color codes. Okay, so right now I'm focusing in on right here. This Fibonacci level, this ceiling, is really now validating itself, because look at how many times we've hit it and we stalled. So let me go back and refresh my screen and go in and say, right here we hit it and stopped, right here we hit it and stopped, right here we almost hit it, right here we hit it and stopped, right here we hit it and stopped, right here we hit it and stopped. So that is validated that this is truly a resistance level, okay? So the next resistance level, if we break through this, is up here, okay? Again, the trend is up, which is awesome. The next level is right here. And again, as it goes up, as this price goes up, mortgage rates are coming down. So right now, there is no indication that we have any reversal, nor is there any economic news, and I'm going to go through that in a second, that also should give us a reversal in this. So my assumption here is we should stay pretty stagnant, because there's really no news out right now that should really play any hiccups in the market. If we do have a hiccup, these are resistance levels right here, okay? This right here is the 25-day moving average. So we have a resistance level right here of a downward momentum here. And then we have the 100-day moving average, which is right here. So we should be trading in this range right here. Even if we had a reduction down to here, rates aren't going to skyrocket. And if rates go up to here, rates aren't going to really plummet. You're going to probably see maybe in the essence of all these trends right here, maybe a 0.25% adjustment in rates in the next week or two, at the worst case scenario. So now let's see what economic news came out or is coming out that may play a role in what happens with rates. So today it's already baked in. There's really nothing that came out and really did anything. Federal Chairman Powell came out at 2:20. Or around about 2 o'clock, between 2 and 2:30. So let's see what happened during the day, if he spooked the market or helped the market. Well, we go over here, and I think they were assuming that he was going to come up with bad news, because again, guys, remember, as this goes down, rates go up. So we went from a 103.86 all the way down to a 103.72. We had a sell-off in the market. Then Federal Chairman Powell spoke. There was a little lag here, and it popped back up and then it stayed stagnant from there. So we really had nothing happen today, which is great. So other news coming out the rest of the week. The trade deficit isn't going to really change anything. Factory orders, nothing. You have federal chairmans, previous ones and new ones like Dallas Fed chairman coming out and speaking. I don't like the weeks when the federal presidents come out and speak, because if they sneeze or say some one word that's a little bit off kilter, the markets can really, really, really react. And normally they react like gasoline. I always say, you never notice when gasoline goes down, it goes down by pennies, over weeks. But when it goes up, You can drive on your way to work in the morning and it's $2, and on your way home it's $2.50. I know they're not that now, but you get my gist there. Okay, so now where we're going to start seeing some play here is on Wednesday we start seeing some jobs reports. Okay, that's there. On Thursday we have some additional jobless claims as well as unit labor costs, and then on Friday we had the unemployment rate and non-farm payrolls. I don't see anything that should hurt the markets throughout the week, except for on Friday when we have some payroll numbers. That is one thing that could spook the market on how many people get back to work, as well as average hourly earnings, because people make more and more and more money. That's going to drive up inflation even more. So, but let's go on to rates. Okay, so I post this every day. This is a survey of mortgage lenders all over the country. These are not my rates. To get my rates, I'm going to show you how to get a hold of us to give you your customized rate. But right now, the 30-year conforming, jumbo, FHA, and VA are this: 3.14, 319, 318, and 276. Okay, the 1 day, 7 day, and 4 week delta. Delta means change. Okay, so a 1 day change is we're down 3 basis points than where we were yesterday. 3 basis points equals out to numerically 0.03. So virtually nothing here, nothing in the past week. And over the past month, our rates are down, or rates in general for mortgages are down about 1/8 across the board. Okay, so that's where generically rates are throughout the country. How do you get your customized rate from us? Go to therateupdate.com. Click the tab right here to apply for your loan. If you're ready to start moving on a mortgage right now, you can click here to get started, get pre-approved, anything you need to do. This is the #1 tab to do that, especially if you're buying a house. This is awesome because it'll keep you in tune from when you put in your application all the way to closing. What I mean by in tune is you'll get alerts on your phone basically every step of the way of the mortgage process. Not like those other places that you put in your application and you just hope somebody might follow up with you, or you can get a hold of somebody at some point. This is what we do. You're going to be automated throughout the whole entire process of milestones. So every time your loan moves to a different stage, you'll get an alert. Plus, you'll have a loan officer, a loan processor, and a loan assistant tied to you. So if you need assistance from us at any time, you can get it. Okay? How do you get started? If you want to call in, give us a call at an 800 number, 844-775-LOAN. That's how to get us. But the #1 thing people are doing is they're going to the calendar. And this is called Calendly on our website. You can pick from a 15 to 30 or 60-minute consultation. What you'll do is just click it. It'll open up the calendar, give you all the days and times available. So let's say, okay, I'm going to be available Thursday. I'm only have a half day. I'd love to talk with you Thursday at noon. You click it, you plug in your information. It'll give you an alert. It'll alert me. It'll go into our calendar, and then we'll get in touch with you either by Skype, Zoom, or by phone, however you want to do it, the easiest way to do that. However, what a lot of people don't understand are the programs that we have to offer. So so you know, I have 15-year loans, 30-year loans, adjustable rates, FHA, VA, jumbo, USDA, reverse loans. If it's a mortgage on a residential property, we most likely have it. We can help DACA recipients buy homes. If you have an I-10, we can help you. If you're self-employed and you can only go off of bank statements, we have programs. So what I'm trying to say is, if the program's out there in the market right now, I got it. Okay, so I should be your one-stop shop. We are a lender. So that means we make the decisions. So that we don't have to say, well, we got to wait for this person or that person. So we can do it all in-house. So if you want to find out more about programs and products that we have as well, and learn more about my team, go to YouTube and look up The Rate Update with Dan Frio. We have over 800 videos. So if there's something in there that you have a question on, it's probably addressed. If not, what should you do? Well, go back to my website, scroll down here, call the 800 number, and call and talk to one of my professional loan officers Every one of us has been in the business for at least 15 plus years. So we know what we're doing. We can guide you through this entire process step by step by step. So that is it. Sorry for my rant today, guys, but the weekend was kind of frustrating because I'm getting calls from people that can't get a hold of their loan officers that want my assistance but don't want to use my services. So I hope you can see my point there. So other than that, please give me a thumbs up, subscribe, click down below, and hit the bell so every time I post a video, you get an alert. God bless, guys, and I'll see you tomorrow, same time, same place. Bye-bye.